What's up, guys? It's Japa Rico here. Recently, I got a question about Bitcoin by one of my best friends. She knows who she is, but anyways. So, my best friend, you asked me about Bitcoin. And the thing is that when you look at the charts, uh, I have to show you because I have developed a few scripts that help me to analyze the price. And but first of all, they are a little bit difficult, so I have to explain by showing the chart first. So let's take a look at the chart. Another angle. And okay, so here is the price chart, and I'm on tradingview.com. If you don't use this platform, I strongly recommend that you use it because it's very useful, very easy to use. So let me just take, okay, I'll get rid of a few things that we are not relevant for the moment, but will be relevant in a few more minutes. Okay, so here I have the price chart for Btcusd on the daily chart. So this price chart I'm getting from Bitstamp. Usually I use this broker as a reference for price. You can use Coinbase as well. It depends on what you like to see. There's not much difference between these two. So let's go back to Bitstamp. So as you can see, I'm plotting these PVA candles plus dragon. This is the PVSRA. For those who don't know, PVSRA stands for price, support, and resistance. Price, volume, support, and resistance analysis. And what is PVSRA all about? So first of all, we have to identify the colors. So you have a few different colors here. You have green colors, you have red, you have blue, and you have magenta, which is yeah, we can't see it at the moment, but we have 4 different colors. So the first two, green and red, they show a strong accumulation of volume, okay, which was about 200% of the last few candles. I don't have the number of candles exactly, but it's 200% of variation for a certain average of this of certain number of the past few candles. For blue and pink, or blue and magenta, I think it's pink here, or magenta, forgot, but it means 150% of variation. So whenever you have colors here on the volume bar, it indicates a huge accumulation of volume, and we call it notable volume. Okay, so we call it notable volume. And we also have a few other lines that I would like to talk about. The first one is this yellow dotted line. This is the 200 EMA. For those who don't know, 200 EMA stands for exponential moving average. This orange line represents the 233 EMA, also the exponential moving average. This belt here, oops, let me just get rid of this. This blue belt that you can see with the lower band and the upper band and the middle line here, this is the dragon. Okay, so dragon, which means the 50 EMA. So the 50 exponential moving average. This other line here, which is the white line, it represents the 25 WGT, which is the weighted weighted average. I forgot now, but this is the weighted average, is another different average that we use in PVSRA analysis. So I coded this PVA candles plus dragon this is based, this is the name of the indicator. You can also use it because it's available for free. So I made it available for free. You just have to go to the library here on indicators. You just have to look for PVA and just apply these two. One is for the volume on the volume bar, and the next one is the PVA candle plus dragon. Both of them were coded by myself, Japa Rico. So you can just do that, and once you click here and you click here, you have those indicators plotted on your chart. Okay, so that said, we go back to the chart. Whenever you have this accumulation going on just under a, in this case, the is a resistance level, so the 200 EMA, and first you need to identify the overall trend. So the overall trend is a bullish trend, even though we broke a little bit, but after that we bounced back again and went up along the bullish trend. Okay. How do I know if it's a bearish, so going down, a bearish trend, or a bullish trend? So all you have to do is look at your baseline, okay? And the baseline, you need to find a line of support or an area, okay? It doesn't have to be a line, it could be an area or a line of support and resistance. For us, we are using the 200 EMA as our baseline. So the 200, once again, is this yellow dotted line. Whenever price has been traded above, that means a bullish trend. Whenever price has been traded below, it's a bearish trend. So here was starting to become a bearish trend, but after all, it bounced back up again and continued on a bullish trend. Okay, so right now, if you ask me, oh, Japa Rico, in what kind of trend are we? So I would say, because price is being traded above the 200 EMA, I would say this is on a bullish trend. Okay. So another thing that, okay, so first we identified that we had this accumulation and was accumulating just below the 200, and that means the price was preparing to bounce back up once again. How do I know? Because price was accumulating for a while, and then after that it went up with this notable volume, okay, and already crossed the dragon up and closed above the dragon. So once this candle here closes above the dragon, and it's on a very clear bullish trend, okay, I already did this small accumulation just for a while, okay, small in terms of period. So in terms of period was small because it was only accumulating for 1, 2, 3, only accumulating for 4 days. So it did a small accumulation, but the accumulation was with notable volume. So you need to find notable volume, and after that cross it back up again. So that means that from now probably price will go up, something like this, which actually it did, right? So it went up. Okay, so now how do I identify that this will continue to go on a bullish trend? And then I have another indicator that I also coded, which is this one, which is the Japa Rico Pvsra trend. Okay, and based on this, what you can say is that once it crosses back up here, okay, you have the green and the red lines. The green line is crossing the red line going up, okay, which is in this case. So once it crosses the green line, crosses the red line, but the green line is going up. So you wait until this candle closes, okay. So right here, you're going to place a buy order, okay. Of course, this is not financial advice, this is not financial recommendation of any kind, so this is just the way I trade and I'm sharing with you guys. So if you want to follow, you don't have to follow. If you don't want to follow, don't follow. So this is not financial advice. But anyways, so here I'm going to place a buy order, and when I'm going to close, there are a few ways to close this order, okay. So once would be when the red line crosses the green line, and the red line goes up, the green line goes down. And this would be a close signal telling me, okay, so now it's time to close. So let's say if you have done that, you would have made, so from here, okay, because you would open after the candle close. So once here, right, you have, so it just crossed here, so you would have opened this position here, okay, because it's 1 day after the green line closed up and the red line crossed it down, then the green line crossed the red line going up. So it would be 1 day, so it would be here. And you would have bought this Bitcoin USD Forex pair for 22,000 Bitcoin, okay? $22,000. If you have done that and you have closed it exactly on the next day after the red line crossed the green line going, the red line going up, the green line going down, so it's 1 day, okay? So 1 day after that would be here, okay? So if you and if you cross when the day started, which is here, okay, so the day started there, okay, so it's always the next day. So don't close the same day, because you're never sure if the crosses will prevail or not. So maybe intraday, maybe in the beginning of the day, it's showing to you is crossing, but when the candle ends, when the candle closes, it's not crossing anymore. So that's why you have to wait until the next day. So the next day you waited, and then here is how the next day started. And if you have done it, if you have if you had closed at that time, you would have made 30% of profit, okay? Because price went all the way up from 22K to 28.9K. So you would have made 30% of profit. Okay, so that's one way. Another way to cross, okay. Let me just, okay. So another way, oops. Let me just get rid of this. Okay, anyways. Okay. Another way to close this position is when you find another, like the next level of resistance from the chart. Okay, in this case, if you look at this chart, you can tell that I found here some kind of level. Okay, so would be this kind of level of support that in this case became resistance. Okay, so if you have done that, you would have made, actually you would have made more or less the same, because if you look now at the chart, you can say that you can see, right, that you would have opened here and you would probably have closed it here, but if you close it here, would be more or less actually the same, more or less the same, a little bit more, is it? Yes, actually would be, no, actually would be the same, because, oh yeah, so a little bit more, guys, a little bit more, because the next day the candle opened at 28, yeah, around here, so a little bit less. So you would have made a little bit more US dollars if you close it on the next level of resistance. Okay, so but let's take a look at the next move, okay, which is the important part of using all these indicators. Is not what happened in the past, is what is going to happen from now on. Okay, so I have, if you look at this, the green line is crossing the red line, and this will probably happen. I'm never sure, because as I always tell you guys, right now it's crossing, but maybe tomorrow it will not cross. That's why we need to wait until this candle ends, until this candle closes, and then once it's already closed, and then we can see if the green and the red lines have crossed or not. So tomorrow I'm going to come back and I'll get back to you on this. Okay, so once again, Thanks for watching. If you have any questions, please let me know in the comment section below, and I see you guys tomorrow. Bye.